All right. Good morning, everyone. Hope everybody's doing well today. Let me just turn up my audio a little bit here. Hey, good morning, everyone. Hope everybody's doing well today. Turn up my audio a little bit here. All right. One second. Let me get this thing going. All right, we're live. This is great. This is much, much better than me doing it on Zoom and re-recording it and putting it back up. Let me just get everything going and we'll be able to start. And I'm hoping to do these more and more live so that you folks can participate and watch me do these live. So let me go ahead and share my screen. And there's my screen. All right. This is good. I like this. Okay. Good morning, everyone. My name is Roger Scott. I'm the senior strategist for, I almost said Wealth Press, for Trading Pub. It's Wednesday. It's December 20th. I usually record these videos in the morning, and then I upload them on YouTube, and you guys can watch them. But I decided to do something different. I actually decided to do this one live. So no pre-recordings, nothing. I'll do my market analysis, and I won't have to upload it, which is great. So as you could see right here, the market is this morning down about 47 points. NASDAQ is kind of random. The Dow's kind of random, down 82. Now, typically, folks would be like, "Well, Roger, the market's down today. This means that we're about to begin a downdraft." No, it doesn't really mean that. What it means is that the market is simply consolidating right now and pulling back, which is very, very typical and not that unusual in light of everything that we're seeing right now. Let me just turn up my audio to make sure my audio is good. All right, that's good. So it's very random action, and this is very, very healthy in light of what we're seeing right now. Now, before you get too excited, we have GDP tomorrow, and we've got personal income, and we've got consumer confidence today at 10 a.m., which means you don't want to make big trading decisions before 10 a.m. in the morning. It's not a good idea, and I typically don't. Now, looking at the bond market, this is amazing. The bond market is saying rates are, in fact, going down. And that's one of the biggest reasons why the stock market has been doing this. I mean, you got QQQs at all-time highs now. Definitely something we have to pay attention to. And if you look at the SPY, we are going beyond and above all levels here. Look at that. We're almost past this level right here, and we're about to hit 480 if it continues going up, or 470, which is the 8-day EMA, one or the other. Now, as I mentioned, we've got durable goods and personal income tomorrow. The big report is going to be personal income, and this is something the Fed does look at. Now, here's the problem. You're going to have a lot of low volume on Friday. Holidays. I'm going to Puerto Rico. People are taking off. People are not trading right now. Institutional funds are not trading very much right now. They're not selling, but they're not necessarily buying. What we're going to be looking at is the core right here, core PCE price index year over year, and right here, PCE price index over a year. I'm going to try to highlight it if I can. Let's see. There we go. So yeah, nobody's going to be looking at month over month. This is not a big report, but year over year, this one and this one right here, those are the big reports that the Fed is going to be looking at. And notice 3.4 versus 3.5 versus 2.9 versus 3. I don't care what this number is, as long as it's below this number. This will tell the Fed, hey, what we are doing is in fact working. If these numbers are not lower, if these numbers are 3.5 or 3.6 or 3.1 or 3.2, it's not going to be good for the market, especially for the bond market. And the bond market it's what's been holding up the stock market, because this implies that rates are in fact going to go down. Now, let me talk a little bit about global economy, and then I'll talk about the rest of it, and I'll give you guys some goodies and so forth. Again, this is the first time that I'm doing this live in the morning instead of pre-recorded. And my goal is to have you guys come in morning and ask me questions before the market opens. So what are we looking at today? We got global economic bellwether FedEx. They didn't do well. Looking ahead to fresh batch of economic data. That's happening today, Thursday and Friday. You've got Tuesday session. We got a 23-month high in the S&P. Blue chip and tech stocks climbed to a new high. I can't believe it. I remember crash, correction, and none of it happened. We made a low a year and a half ago, and we've been going straight up. Economic data on housing starts unexpectedly rose to a 6-month high. Lower interest rates, folks. Very, very simple. November building permits fell to a 4-month low. Now, we've had the opposite. We've had really good permits and really low housing starts. Now it's housing starts, less permits. But I think if rates continue to go down this trajectory, things will move in the right direction. Now, here's where things get really interesting. Barkin suggested on Tuesday that the Fed would cut interest rates if recent progress on inflation continues. But he emphasized the need for a conviction that inflation is on track to return to the Fed's 2% target. If you're going to assume that inflation comes down nicely, of course, we would respond appropriately, Barkin said. Atlanta, President Bostic said he anticipates that the U.S. Central Bank will implement 2 rate cuts in 2024 during the second half of the session as inflation gradually declines, but clarified this is not like there has been an active discussion on this. And there's a 71% chance. He says there's not been an active discussion on lowering rates, but at the same time, you've got a 71% chance of a 25-point base cut. Hold on one second. I got to get my cat out of here. 1 second. Look what I'm dealing with here in real time. All right. Always something fun around here. We've got Micron. We've got General Mills. We got BlackBerry on the table. It'll be really interesting to see how these numbers go. Consumer confidence report comes out right here. You could see it's coming out at 10 a.m. and you've got existing home sales at 10 a.m. I'm looking for existing home sales to be a little bit subdued. Because why? It's the end of the year. People typically don't buy homes in the last quarter of the year. They buy homes in the spring and in the summer months ahead of the school year. This is not the time to buy homes. Matter of fact, I know a lot of realtors that are saying this is the time to just chill out and wait. February, March, April, May, that's when things start out. So I'm not expecting this number to be great. You've got GDP tomorrow. They're looking at annual rate at 3.6. I'm hoping that the number is a little bit more solid than that. But that's where we're at tomorrow with the data. Now, let's continue here. Let's continue. Europe not giving us any tailwind. Soft inflation data from UK and Germany. Germany's not doing that great. You've got China giving us no tailwind. They're closing lower as investment sentiment remains gloomy. Media, artificial intelligence, and brokerage stocks declined. Japan, they just can't keep it down. Hit a 5-month high. They're looking at US and they're talking about going positive with their interest rates. Very, very important part of the puzzle. FedEx plunged 9%, not good for the market, but the market held on. Lowe's company fell 1%, not really anything major. Paramount rose. They got a little price target here. I'm curious how that stock is going to be doing over the next couple of months. Now, let's talk a little bit about indexes and sectors. And remember, today's Wednesday. I'm going to give you a long and a short. But first, let's talk about sectors. So you've got on a short-term basis, small caps. Yesterday, you know what led the market? Let me show you this. Look at the S&P. Right? It was up 0.61, right? Look at IWM. Up almost 2%. So you're talking a gain in the S&P of 0.61, and you're talking strength in the small caps of almost 2%. Do you see that? Big difference. I mean, huge difference. So this is telling us that small caps are definitely seeing buying power. Interest rate sensitivity to the core. Look at that. Home builders, interest rates, retail, credit card debt getting lower with interest rates getting lower. Mid caps, same as small caps. Energy stocks, not sure what energy stocks are doing here, maybe coming back. Real estate, consumer discretionary, semiconductor, communication, basic materials. This is interest rates. Now, financials down here. Utilities are down here for, if interest rates are going lower, utilities should be going higher. But again, it's not all, it's a little whacked. It's a little out of whack. They're not balanced right now. But small caps, home builders, retail, real estate, consumer discretionary, technology, That's where the money is till we get some confirmation that interest rates are not, in fact, uh, going lower. They're going to stay where they're at. Let's look at some stocks that are looking really good right now. Now, I like Affirm a lot, a lot. I like AMD quite a bit. I really like the Russell 2000. Honestly, I would buy the Russell 2000 right now because it's breaking out, and I would put a stop right here. Snap is looking really good. I love these pullbacks that come right back up. The spider looks amazing right now, just the S&P 500. And this is the biggest problem with picking relative strength, strong stocks right now. When everything is looking like this and everything is comparing itself to the stock market, it's hard to find strong relative strength stocks. Even Cathie Woods, look at this. I can't believe I'm saying it, but I am. Meta's looking really good. Coin, you got rally, interest rates, sensitive crypto stocks. Gold is starting to break out, looking pretty good. But I think you're getting a good idea. Everything is breaking out right now. Everything is looking great. My suggestion is to find stocks that have been basing. Like look at AMD. It's been basing, whereas QQQ is going straight up. Basing. You want to find stocks that are basing a little bit. Basing. Right here, basing. You don't want to go with stocks that are just going straight up. You want some degree of basing because that tells you that those stocks have been able to digest the upside. Like Path, for example, not going straight up, sideways, then up. That's a pretty good choice. It's more important for me to give you the type of stock that I like than the actual stock because everything is moving right now. XBI, look at that. Nice consolidation to the upside. But more importantly, and this is something that's going to rear its ugly head sooner than later, look at that. No stocks making a 50-day low. No stocks making a 20-week low. This is what happens when stock markets are making all-time highs. It's very hard to gauge stocks to the downside. Let's see, 20-day breakdowns. Let's see what's moving, what's breaking down a little bit. United Health is breaking down. BCE is breaking down. Short Russell, yeah, duh. Let's see here. Tesla Bear, that's funny. There's a Tesla Bear company. I can't believe that. Not much, mostly indexes. See that? Not a lot of breakdown. So it's very, very, very hard to gauge stocks that are breaking down right now. Let's see here. APPN. I think this one is getting ready to break down again right here, come back to the channel. And WHD right here. And then if you look at 90-day lows, which we'll look at right now, just out of curiosity, you'll see there's just not much there. There's just not much there. And that's just telling us it's hard to gauge these stocks. The problem is if the market has a nice little shakedown, 2-3 days of a shakedown, that list is going to be huge. So be very, very, very careful. So as far as stocks that I'd be buying right now, I'm going to tell you what I'd like right now to the long side. What I really like to the long side. I like Intel right now to the long side. I like Citibank to the long side. Nice little consolidation here. And I like AMD to the long side. To the downside, I can't give you any good picks right now. There just aren't any. We have to sit and wait. Now, if you like this live video and you want to attend this event live so you can ask me questions in the morning like I do in the VIP room, let me know. Send me an email, roger@rogerscott.com. Subscribe to my Telegram channel. You'll be alerted immediately when I go live doing these. Now, folks, got to tell you something. Are you an all-star trader looking for a challenge? If your luck if so, I think you are in luck because I'm on a mission. And while I can't go into full details, I need 19 all-star stars to join me. I'm looking for top 19 traders. It's all about projects that I plan on releasing next year. And believe me, if you have what it takes, you're not going to want to miss out. Will you be one of the 19? Click on the link below. Join me at 1 p.m. Eastern time. We're going to go live right after VIP room. I hope to see you guys there, and I hope you have a great day. Please subscribe to my YouTube channel. Go to YouTube. Go to Roger-Scott. Roger-Scott. There's a lot of Roger Scotts out there. In the search box, in the YouTube video, under the description, you will find a link to my VIP room. It starts at noon today. Tomorrow, it's at 11 a.m., but today it's at noon. And you can subscribe to my Telegram channel. Please do that. And I'll start doing these videos live so that you guys can ask me questions in the morning while I'm here as well. I hope you guys enjoyed this video, and I'll see you guys later. Bye.